Hello and welcome everyone for another weekly market commentary here at StashAway. I have with me again our Chief Investment Officer, Freddy.
Hi there.
So welcome back, Freddy, from your holiday last week. Glad to have you back this week. Lots of things going on over the weekend and throughout last week in general. A couple of things we already discussed in our monthly newsletter that you've gotten last week. But some of the things we go into more detail today here in the video. But before I get started, I want to just give a quick overview of what StashAway Academy events we have coming up over the next couple of weeks. Really interesting. It's a new concept that we're doing. It's actually a live webinar. It's called Inside the App and the Company. There will be one on the 27th of May in Singapore. It's at 6:30 p.m. You can find out more about this by going to our website, stashaway.sg/academy. We also have the same webinar going live for our audience in Malaysia, and that is on the 4th of June, also at 6:30 p.m. And you can find out more for that at www.stashaway.my/academy. If you have any other questions, or if you can't find the website, feel free to email us at support@stashaway.com as well, or give us a call. On our website, you find our phone number for our support team. So Freddy, lots have happened, especially the U.S.-China trade war. We thought for a long time that it's kind of getting really, we're close to signing something. There was some backing out and back and forth, and now new tariffs are imposed.
Yes.
Maybe you can give us a quick recap of what happened and kind of what the impact is so far, or what the impact could be potentially here going forward on that.
Well, it's starting to look like it benefits Trump more to have more airtime on the ongoing trade war with China into the 2020 election and actually to have a deal. Mm-hmm. It's starting to dawn on us that this is now taking a turn because actually approval ratings on his trade fight with China is not bad at all.
Yeah,
he's getting support, and the trade team is one of the rare teams that's bipartisan, meaning both parties in the U.S. both have a commonality here. They both support a better trade practice with
It is
China.
actually where you don't hear much from the Democrats, like so pushy, whereas on the domestic issues and border security, all this other stuff, they're really pushing back, right?
Yes.
Yeah.
And also don't forget, on this particular team, no one in the Democratic Party can challenge Trump to it, unless you have a better, more welcoming approach with the voters. By picking on the trade team, you're just effectively drawing even more attention, potentially more support for Trump's trade fight with China. So this so-called trade tension or trade war is going to linger on, and into next year is not going to go away.
Yeah,
and hence the tweets flip-flops with tweeters. The volatility with his tweets is always going to be there for markets. And that's unfortunately what most of us are focusing on. Yeah. The fire and fury of the tweets, whereas in reality, the real impact of the trade tariffs are actually really small in terms of it's just a fraction of a percent of a GDP in either country. So people forgot the fact that the tweet sounded really threatening, but the reality is otherwise.
Yeah, when you say though that it could linger on over the next year and a half or whatever until election time even, right? Do you then suggest for people what to do with their portfolios? You know what I mean? Like, it's if is this going to be a downside for the whole year and a half, or will the market grow, or like?
Well, I think it's important then to look at the effects of the tariffs. If you look at the 25% on all goods from China, that's 500 billion on 25% is $125 billion of tariffs. That's only about 0.5% of GDP.
Very small, and when you put it in percentage, right?
Very small, and one standard deviation move in the GDP is 2.2%. So this is barely a quarter of a standard deviation of the GDP number. And think about, right, even if you assume that Trump next 1.5 years is going to keep doing this, and that he gets re-elected for another 4 years, so 5.5 more years of this, the impact in terms of GDP over the 5.5 years is 0.5 times 5.5. Yeah. It's not a lot.
Yeah.
So
it's just the numbers in the news sound so big, right? Always,
exactly.
Right? When you see a 500 billion, it sounds like
Exactly.
an unfathomable number, but
yes,
just putting it back into
so
percentages.
I think what we're trying to say is that these tariffs can certainly create more noise and volatility in the markets, but it doesn't change the path, the existing course of the economy or the existing trend in the market. It doesn't change it.
Yeah,
it's just distractions.
Yeah, no, I think that sums it up pretty well right there. Another thing that happened then on Thursday, Friday was Trump blacklisting Huawei or people selling to Huawei components. Maybe you can give us a little bit of an overview there on what happened there, because that's kind of like people were thinking that's like Bloomberg I think said it's the nuclear option that Trump is pulling, right?
Well, you know, as of this morning, the news flow was still like how Trump has banned Huawei and how Google is thinking about cutting off Huawei from its services. But then right about now, walking into this room, we just had a flip-flop again. Trump is now giving exemption for some
stuff. Yeah, it's not clear yet on what exactly.
It's very loose. We don't know exact detail, but you know, there's a lot of flip-flopping, and then you never know what's real, what's not real. However, you know that Huawei is about a third of the global market share for networks, right? Networks, and so the 5G race, could it really derail the whole human advancement on 5G? Maybe not, because there's a second, third, fourth other contenders who could fill in the gap. Maybe it will be disrupted for a little bit of time, but it's not like the humanity is just going to step back from 5G. So the sensations in the news would go, oh, 5G is now rolled back globally because of Huawei, you know. Again, sensationalized. I think the impact would be always, you will realize that eventually the impact is a lot smaller than what the headlines are saying. So do not react to the media, do not react to short-term swings, stick to your investment plan. Your plan details how much you're saving a month and details how often periodically you're investing every month. Right now, if the market is lower, your contribution gets you more units. That remains unchanged.
Exactly. So I think this is like this. You didn't buy a single stock in Huawei, which you can anyways as a private company still. But you know, like this is the point of being a little more global, more diversified across asset classes in general, right?
Oh, that's a good point.
Yeah. So with that being said, let's talk a little bit more in detail about for our Malaysian neighbors and customers, right? Bank Negara lowered the interest rate, I think, from 3.25 to 3%. Maybe you can tell them, the listeners, a little bit more about, what maybe the background was for that and what impact that may have over the next, year or two, or what to the ringgit, especially to their own currency as well, right?
Well, Malaysia's reaction is not unique, because in the region, whether you look at Australia, New Zealand, Philippines, Thailand, and then now Malaysia, they all have the same common economic problem. You have a slowdown in growth, not recession, but a slowdown in growth, and yet at the same time you have very low inflation. So that gives the central bank a lot of room to sort of maneuver and stimulate the economy a little here and there. However, I just want to say that this is not enough. Monetary policy in this region needs to be augmented, reinforced by the fiscal side of things, more infrastructure spending, more development, more enhancements of infrastructures, right? So those things should not be forgotten while we're seeing rate cuts from central banks. That's actually more critical to say. However, not surprising to me.
No, and I think the same is happening, like you said already, in the neighboring countries, right? Like Modi's government, if it looks like they're getting re-elected, right? They're all urged to spend on stuff inside their country, transportation projects, right? Getting them done. Same in Malaysia, same in Indonesia with the recent election as well, right? All these people are very much urged to get these projects going, right?
And what would really turn these markets in the next cycle around are exactly this long-term fixed capital investment, whether it's done by government or together with private sectors. Those are the very, very key things that would decide the fate of markets in the medium term. So a rate cut, I wouldn't put too much emphasis. The impact of a rate cut is probably more immediate for currencies than the domestic assets. So
let's give this as a kind of like a final like learning about this whole situation with the rate cuts, for example, is what are the effects then on, for example, like this home bias, right? If you only invest in your local domestic currency and things like that, right? Here we can actually see the other side, right? What happens when interest rates do drop to your portfolio, right? And why it makes sense to maybe also be globally diversified.
Yeah, I mean, what these things do tend to cheapen its own currencies. And if you are based in Indonesia, Malaysia in this case, there's always this fallacy of home bias. You may think that you're retiring in Malaysia and you would want to just have domestic assets. However, we are all small, open economies that's very export-oriented. And hence, the currency over time may, be diluted in purchasing power. And so you need to think global. You need a certain amount onshore, but you also need a good, sufficient amount that's globally diversified so that you remove the currency risk to your home. Because imagine Malaysian currencies is cheapening up on these trends, and then your import is going to cost you more. Inflation is going to start rising.
Right, yeah.
So there's a lot of consideration. And home bias is often a problem for a lot of investors in
any country.
In any countries outside the US.
Yeah, no, it's very true. So thanks, Freddy, for leaving us with that. I think that's quite valuable information for everyone. With that being said, we hope to see you all next week again. If you do have any questions, feel free to put them in the comments section below. Also, feel free to, again, email us at support@stashaway.com. We're happy to answer all your emails and questions over there. Otherwise, again, we'll see you next week. So have a wonderful, wonderful day. Bye-bye.